Alright, welcome back to the NetTrade's YouTube channel. In today's video, I wanted to make a video on TradingView and show you guys exactly how I have my chart set up. Honestly, they're not all that complicated. They're actually very simple. I don't have many indicators on my charts. I like to keep them very clean and minimalistic. And really the two most important things to me are volume and then the price action itself, when the candles are forming and the strength that you can gather from that. But since some of you guys have asked me how I have my TradingView set up, I'll quickly show you guys, and then I'll talk about how I set my levels that I'm watching, supply zones, demand zones, and all that good stuff. So yeah, let's not wasting time. Let's jump right into it. So obviously the first thing that you can add to your charts, that's very simple. Most of you guys probably already have this on your chart, is volume. Shouldn't be that hard to add. If it's not already on your chart for whatever reason, you can just go up here where it says indicators. Actually, you can't see that part of my screen, but there should be like a little button right here, up like right above where my mouse is, that says indicators. Just search up volume and yeah, it should appear. But obviously I already have volume included, so don't have to double add it. Next off, that's very simple to add, is the EMA. I like to use the 9 EMA. That's what I've seen that works for me, specifically using the 3-minute time frame and the 15-minute. Mostly what I use it for, like for example, I'll show you guys here. It's kind of like a momentum indicator, and it helps me stay in a trade and not get out too early. So for example here, you could have played an opening range play here, which if you don't know what an opening range play is you let price develop for the first like 15-30 minutes. So there right there is like about 20 minutes of price action, and then you have a clear high, a clear low, and once price breaks out of this range, which it happened here, you can enter the trade. So you would enter calls at this point, and then you use the 90 EMA to tell you when to get out of the trade, but only when you actually lose the 90 EMA, which doesn't happen until up here. So you would have had your entry, on calls there, and you wouldn't have exited until here. Obviously you could have taken profits along the way, which I recommend, but your last runners, or whatever you want to call them, you wouldn't have had to exit them until this candle right here, which is where you actually lost the 90 EMA. So that's what I like to use that for. And there's also some plays I use it with the 15-minute candle, which you guys have seen on my live trades, I believe. So that's what I use that for. Also, it gives you like a general idea of like where price is at. So like if price is getting extended on the daily chart, like it was here at the low, we were like 2% extended from the EMA. So obviously you don't want to be buying puts aggressively down here as we're getting extended. Another thing I like to use it for is like to know what the overall trend is, which I mean, typically when you're looking at a chart, it's very clear where the trend is at. But you can use the 4-hour and the 2-hour to just see what the trend is at. So here, even without looking at the 90 EMA, you can clearly tell the trend is down right here in this area. But just as an added confirmation, the fact that it's staying below the 4-hour EMA confirms that we're in a downtrend. So that's another way to use the EMA. And if you want to get a more precise look at it, you can use something like the 2-hour. Even intraday, if you're looking at the intraday trend, you can use the 30-minute. There was a day where it respected the 30-minute 90 EMA perfectly. I think it was on this day right here. Yeah, so here was open and we stayed down below it the whole entire day. So you see this candle here, we came back, retested it, but we stayed below the whole entire day, and then we closed around right here, right under it. So yeah, that's the 90 EMA for you guys. Next thing I have on my chart, which you guys have asked about, is this internals indicator here, which is actually a custom made indicator by one of my trading buddies. And if you guys want to get this added, go up here on the left hand corner, click on your profile. Then once you're in your profile, go to the search bar and search up Trader Creator Pro. That should be his icon right there. So click on his profile. Then over here where it says scripts, click on that, scroll down, and right here, this one that says internal, just click right here and add to favorite scripts, and then you can go back to your charts and it should be added here as internal. So you can see if I uncheck that, you guys will see what pops up. So if I click to view it, you can see the P call ratio, which basically tells you how many puts versus calls are open. And if it's below 1, that means there's more calls open. And if it's above 1, that means there's more puts open. Typically, this is going to stay below 1 unless we get extremely bearish, which is pretty rare. And the second one, which I use pretty often, is a tick. This basically tells you how many how many stocks are basically seeing buying pressure versus how many stocks are seeing selling pressure. And the times when the tick becomes really important is when it gets like to the extreme values, which you could consider the extreme values to be when it's above like 800, 900. When ticks are getting above positive 800, 900, that usually indicates there's very strong buying pressure, and that'll usually happen on candles like this when we're seeing a lot of upwards momentum. And then obviously the opposite, when you're seeing ticks that are negative 900, negative 800. I've even seen ticks go as low as like negative 1,500. Then the selling pressure is extreme and you're going to get a big drop. We haven't seen anything like that recently, and it's just a good overall gauge. I wouldn't use ticks or peak call to tell me to enter a trade. They're not indicators like that, but they're more overall like a gauge, and so you have an overall better understanding of what the overall market sentiment is, and what other people are thinking and how other people are interpreting the current market action that we're seeing. So that's how you can utilize those. And then you have ADD, which is advancers and decliners. It's just telling you how many stocks are green on the day versus how many stocks are red on the day. Today we had a positive skew, which means there was a lot more stocks that closed the day green than stocks that closed red. And that can help you with market breadth, which a lot of more professional traders like to use. Basically, it's telling you that like a day to day where it's very high up, over 1,500, that's telling you that it wasn't just one sector that was strong today, or it wasn't just one stock that was carrying the market. It was pretty much widespread buying today, and that means that the move up today was supported by a lot of buying across the board. It wasn't just niche buying in a particular stock that was making the market stay up. So that's what you can use that for, and that's basically it. That's basically all I have on my chart. That's all the indicators I use. I know a lot of people like to use other indicators like the VWAP, RSI, what's the other one, TTM squeeze. You have all these other indicators, but this is all I use. And for some people that might be like, that's it, like that's all the indicators you use. Yeah, pretty much that's all the indicators I use. Again, most of my trading is based off stuff like price action, momentum, daily setups, patterns, stuff like that, and not necessarily like indicators. Indicators I feel like are more like, what the name suggests, indicators. They're not necessarily buy or sell signals. They're more like indications to help you get a better understanding of what price is doing. But if you've been watching charts for a long time, you can pretty much get that information just from watching the chart. You don't need an RSI chart to tell you that we're getting extended up here. Like without even looking at the RSI, I would guess RSI was around like 80, 85 at this point. So let me actually just pull it up just to show you guys. Okay, so it was a bit lower. It was around 70, but it was getting here at the overbought zone. So yeah, you can basically just gauge that from looking at the chart. If we zoom into like a 1 minute chart, it'll probably be a little bit higher. Yeah, it was hitting that 81 range at this point. So yeah, again, they can be helpful, and if you're a beginner, you might have a lot of indicators, but I feel like the more I experience as a trader, the less indicators I felt I needed on my chart, so I just kept taking them away. But yeah, for the most part, I keep my charts pretty clean and simple. And so if you guys want to copy my setup, there you go. Now let's move on to how I identify key levels and supply zones and demand zones and stuff like that. So I think I mentioned this in a previous video already, but the first thing I like to do is I like to like zoom out. That way I get a better understanding of where price is overall. So I usually like to start off on the weekly chart. It's up to you where you want to start. I've seen some people start off as far out as the monthly chart, or some people skip the weekly and just go straight to the daily. Again, it's up to you, personal preference, and it will vary depending on how the kind of trader you are. If you're more of a swing trader, you're probably gonna want to consider the weekly chart at least, if not also the monthly. But if you're more of a shorter term time frame trader, you might be able to start off with the daily time frame and not worry too much about the weekly. So the first zones that I like to mark are obviously the easy ones, like the high pivot here, the low pivot down here. Then if you're forming like an inside bar, for example, if we were on this week here and I was doing my technical analysis, I would have marked the high of this week, the low of this week, because it was a pretty small range. So I would think that if we broke out of that range, either to the upside or to the downside, we would get an actual extended move in that direction. And it's pretty much what we got here. Once we broke the high, of this week, we got a pretty nice extension here. So marking like the high and the low of the previous week is pretty typical for me. So our previous week we would have marked there, and then pretty early on in this week we broke down below it and we got some nice continuation. So that could have been a nice play there. Now that we've actually broken it, we can take it off and we can do this week, as this week is almost over. So you can see that the low there, the high there, I would want to mark it. And then what I like to do is I like to zoom out and then start getting some like supply zones and demand zones. Basically anywhere where we've seen previous price. So this right here, it makes sense that we bounced off there because one, we had the 90 MA there, and then it's also been a previous zone that we visited. So I like to mark that zone, and then the demand zones, I like to mark them blue. And then we can say this right here is like a supply zone. We rejected off there twice right here in the past, and then obviously this candle we got a pretty big rejection off it again, so I would definitely want to keep note of that. And then basically in the price vicinity that we're at, those are the two major zones. You can see that this zone extends a little bit here. Back here it was support, then it became resistance, and then if we go test it again, we could expect it to be resistance, and then if we break past it, it'll probably turn into support. So right now, as we're heading to that zone from below, we can expect it to react as resistance, but if we get a break above it, it'll likely start acting as support, and then we can see a move higher like that. But for the time being, it's red because for now it's a resistance / supply zone, and you could extend it there because we got some wicks off there from the past. And then that's pretty much it for the weekly chart that I'm seeing, like the major zones. Then as we get closer to the daily, I want to mark this one. This was a very key pivotal price, as it was the high of the last big run we had. So I want to keep track of that, which is basically around the 4,200 area, and we're right at that zone again. And if we break above this, the next zone I would expect us to hit is obviously this next resistance that we have up here. So now that you see that we have multiple lines, you can start setting target zones, and you can start seeing how they play off one another. Today we had a pretty big range, but I would still like to mark this here, and I'm actually going to color this a different color here. I'm gonna mark it red. I could mark the high of today, but since it's basically at this other line, we don't need to add two lines there since we already have one. You could also say this is like a zone because we've tested it multiple times, but again we already have a line there, and I don't feel like that's necessary right now. Then obviously the pivot here, but we already have that marked. And then you have more pivots like down here, but since we're not close to that range, I'm not going to add them at the moment. But if we were to come down here, I would add that right there. This one's also very important right there. This is more like a zone, because since we had multiple wicks off there, and then obviously if we break below here, would expect us to test lows down here. So you can mark those, but they're a bit far off, so I'm not going to focus too much on them. Let's go a little bit closer now to the 4 hour. Alright, so we don't have too much here because we kind of just came straight down. There wasn't like, we weren't really creating zones here. For example, if we would have came down here, traded here for a couple days, it would have been a much stronger zone, but since we came down pretty fast, there's not too much resistance up here, apart from this resistance over here, which this one should be a little bit heavier. And then I guess you can say that one is another small area, but it's not too important. So the levels that are not too important, I'll mark them white, just so I can keep note of them, but they're not too important, so I'm not going to color them. Let's move on to the 2 hour. So now we're getting to more like intraday stuff. You can say that right there is kind of important. So I'll mark that green for intraday zones, and you can color code these any way you want, just whatever helps you remember them. So with this zone, I would expect us to come back test it potentially, and then maybe trade it in this zone, and then eventually test this. Whether we break that or not is going to depend, but if we do break above it, I would expect us to come up to this zone. If we fail to break above it, or we break above it but instantly reject, then we would probably come back and retest this. If we break that, next zone we have is down there. Then this you can say is a zone. So I want to highlight that, but I'm not going to make it too bright because it hasn't been like a super notable zone like a weekly zone would be. It's more like an intraday zone, so it's going to be lighter, but it's still going to pop up on the chart when I'm looking at that area. 5 minute, I like to make note of the pattern that we're currently seeing of higher lows here. You could also say these are the higher highs. So let me color code these a certain color. Let's make them that color. And then these, let's make it okay. And these are important because it's showing us the trend. And obviously if we were to break that, so for example, if we fail to make a new high and then, you know, we start coming below this low, I would potentially look for puts, and then if we really break the trend and establish a lower low, then I would really start getting aggressive with the puts, and then it would be expected to have a pullback here, so we could have a pullback there, and then that would be our next higher low. But it's continuing the trend, so it's good to keep note of that. And as you go higher and higher, you'll keep making these lines, and then once they break, they could act as targets on the way back down. So like I mentioned, let's say we hold there, and then we make another higher low, but then we break it. Then if we bounce, you could find an entry somewhere there as we're coming back down. This would be your first target, and then we break that, that's your next target, that's your next target, etc., etc. But that's basically how I identify key zones, key points, key levels, and all that good stuff on charts that I'm trading. But yeah, that's basically all I have for you guys today. Hopefully you guys enjoyed the video. If you guys were able to take something from this video, please make sure to leave a like on the video before you leave. But yeah, I'm gonna leave you guys there. Thank you so much for watching the video. I'll catch you guys in the next one. But it's been me, Zero, and I'm out. Peace.